Yeah, this has not been a stock that's performed very well. I was just having a look at the chart there, Steve. This is Duolingo, the fun language app. Um, Down about 38.5% year to date, but actually down 61% off its May highs. So it's been a pretty hefty fall back. Now only around the 9 billion kind of mark. It was a lot higher than that. And this was a report which was, I would describe it as sort of a tale of sort of two halves. Spectacular user and financial growth, and bad guidance. Essentially, is what I would explain. But let's go through it, and we'll see what you think. So, um, revenue came in at $271.7 million. That was up about 41% year over year. Really handily beat analyst expectations. 281.9 million in total bookings. That was up 33% year on year. Subscription bookings actually grew 36%. So again, really, really strong. About 80 million in adjusted EBITDA. That was up 68%, the highest quarterly EBITDA margin that they've achieved. That was a 29.5% adjusted EBITDA margin, up 480 basis points. They reckon this demonstrated some operating leverage. And gap net income, 292.2 million. That's up like a bazillion trillion percent. But actually, it's boosted by a one-time tax valuation gain, Steve. So not really a useful metric. You'll probably have to wear that one out. Yourself, in terms of their key user and key operating metrics, I've got daily active users, monthly active users, paid subscribers, and a new one for you, Steve, which I'll reveal at the end that they like to give you. It's got a very interesting name. Daily active users, that came in at 50.5 million. That was up 36%. Just so people who've never come across that term before, that quite literally means people who are opening the app or website every day. Monthly active users, that's the same, but just doing it once a month, essentially. That was 135.3 million, up 20%. Paid subscribers, Steve, 11.5 million, up 34%. That is just people who are paying for the two products that Duolingo offers, Plus and Max. So they're paying for a subscription. The metric we got, Steve, that I like the name of was subscriber penetration. This was up 9%. Sorry, this was 9% for the full year 2025, up 50 basis points over the last time. This is a percentage of monthly active users that they've converted to paid users. So that's what they mean by penetrating their subscribers. From the earnings call, essentially they were talking about the transformative role of AI within the business and a strategic shift towards long-term product efficacy. And normally that's bollocks, but actually in Duolingo, I would say this is a little bit more prevalent. They say, for Duolingo, AI is a content multiplier. So using generative AI has drastically accelerated course creation and content development for them. So they can essentially develop and launch a course much faster than they used to be able to. Allows them rapid expansion into new languages, into higher education courses, niche courses, subjects like math and music. It's really helped them be able to launch stuff like that faster. They have AI-powered premium tiers, Duolingo Max, which is the higher paid, higher priced subscription. Uses advanced AI like a GPT-4, offers conversational tools such as Explain My Answer feature, AI role playing, so you can talk to an AI person in the language, and that will help. One of the problems that people used to have with Duolingo is that a lot of it is just kind of touch the word that's the correct word or speak the word that's the correct word, but actually having somebody conversing back to you in that language and telling you where you've gone wrong and having answers explained to you is a lot more helpful. This has actually driven a 7% year over year increase in subscription average revenue per user as customers have migrated to these premium tiers and up these premium tiers. Now, the guidance, they raised the full year revenue guidance, but lowered the midpoint of its Q4 bookings guidance to prioritize long-term product investments. So they said essentially a strategic slowdown in a shift in the A/B testing away from immediate monetization and towards features that actually enhance teaching effectiveness and then sustain user growth over multiple years rather than going for the quick buck. Market didn't like that. I actually think it's a good thing, but we'll see what you think in a bit, Steve. The balance sheet, Steve, strong, debt free, 1.1 billion in cash and short term investments, ample liquidity for R&D, strategic initiatives, and actually ample money for this strategy of actually making themselves more useful, I would say. Yes, so I would say they're sort of characterized by financial prudence. I would say, Steve, robust liquidity, which is very typical of a high growth software platforms built on these kind of subscription models. Strong liquidity, essentially debt free. About 431 million in unearned revenue. This is essentially a subscription backlog, which is collected for future service delivery. Can't recognize it at the moment. 72.5% non-GAAP gross margin, which is exceptionally high. Shows a scalable or scalability power of the software-based model. Just to let people know who've not come across Duolingo before, it essentially has a freemium core, which is you can learn any language you want for free, supported by advertising. There's then a subscription you can use to remove the advertisements to gain hearts, which are essentially your lives, I guess, in the Duolingo game. So every time you do something wrong, you lose a heart. If you lose too many, you can't play until those hearts regenerate unless you start paying. Product diversification for them now. They're strategically expanding into different languages, but also into other core subjects like math and music, which is the first steps into them teaching more and more through Duolingo. They're also doing a Duolingo English test, which is a online standardized English proficiency test, which is actually accepted by thousands of universities worldwide now as well. So, as I did with Coherent, I'll also do with Duolingo, which is like 3 things that I noted that were positive and 3 things that I think you've got to watch out for. I think they've got a massive engaged user base, Steve. I think the 50 million in daily active users is a massive milestone, demonstrates superior product market fit, strong competitive moat against these free AI tools. I like Rightmove, which we covered earlier, Steve. I think this is going to be very difficult to unseat. The AI for efficiency, the AI for premiumization has cut costs, automated content creation for them, increased revenue, justifying, I would say, the higher price for the subscription tiers and their advanced features. I think that's very, very positive. If you're looking for reasons of why AI is going to be effective for companies, Duolingo is another tick in the box of AI is good for us. Cash rich and debt free, balance sheet provides the flexibility for a shift in strategy, allowing them to sacrifice short-term bookings for long-term product quality without being in any kind of financial stress. I would watch out for valuation versus growth deceleration. Market's going to be really sensitive to this growth slowdown if it comes. The cut in Q4 bookings guidance suggests that the focus on growth over immediate monetization might pressure the stock price in the sort of short term, I would say. Whilst we've covered the positive aspects of their AI defense, it's worth noting that there could be AI disruption. I think Duolingo is what we describe as an AI leader. But I think the quality of free general purpose LLMs like ChatGPT-5 and Gemini could challenge the value proposition of its premium max conversational features. But we don't know how those companies are going to monetize in the future either. So that's all up in the air. And they've got to really innovate. They've got to keep up the gamification. They've got to keep the marketing really good. They've got to keep the subjects coming. Otherwise, they're going to encounter cyclical user engagement patterns typical of educational resolutions and learning apps, and that's a challenge in itself. But I'm really interested in this here, Steve, at a 9 billion valuation. I can't lie to you. I think a forward PE of 60 on this kind of growth is not the worst price to pay for 50 million. Sort of highly engaged daily active users who are getting that bed threatening them every day, Steve, to come and learn Korean. I'm on the fence with it, Steve. It's been on the watch list for a long time for me. When it was 60% higher than this, I couldn't get on board with it. I couldn't figure it out. But if you're asking me, am I going to pay under 10 billion for a company? If I was going to buy it in full today, would I, and I had 10 billion in cash, would I buy Duolingo today? I think so. And that's how I like to think about my investments. And yeah, it's high on the list. How's it for you, Steve, as somebody who's more in tune with this kind of sector?
Not sure I'm more in tune with this kind of sector, but I agreed with everything on your pros and cons list towards the end of your piece there. I think the bit that stuck out for me is exactly how AI disruption looks. So I was looking back. We've talked about this before on this show, and I didn't really clock it properly at the time. But the more I hear this company and the CEO talk about AI disruption, about AI and the things it does for them, the more worried I get. So back in April, he was talking about saying, we've now created about 148 courses in a year. We never used to be able to do that. Look at what AI can do for us. That fills me with fear at the idea that AI is bringing down the barriers to entry for writing language courses. And you said it runs on or something like a GPT-4. And I'm cautious about how easy or difficult it will be to produce similar, I think clearly not as good things. And Duolingo has a good product. It's well gamified. Its user base likes it. As you point out, there's more and more of them. And I think they have exactly. You said you like this and the market doesn't. I think they are dead right to be focusing on their user base, because if you think there is a chance a competitor might spring up, and I think it's hard to rule that out at the moment, what you need to do is get as many people onto your app as you can, because I'm not sure they'll leave easily. If you try to charge them too much here, and I think their max is about $29.99 a month or something like that, which is probably actually manageable for most people on that platform. But if you try to crank that too high up to say, and what you get is another 150 or so AI led courses, sooner or later someone will show up and say, well, we can sort our own AI courses ourselves and not worry too much about paying this. $29.99 I think works, and I think the number of users in there makes them a very interesting ad tier thing. So I think what I would be interested to figure out, and there's no way you have this in front of you, I would guess, is how their basically price per user or revenue per user works out here against something like Reddit and Pinterest. So what I remember seeing recently is that in terms of users and how much they kind of make per user, Pinterest is under monetized from what I can see of it. And you can read that one of two ways. You can either read it as, oh, they also got smoked this week, by the way, at Pinterest in terms of stock prices. But they either are under monetized and have an opportunity to ramp that up, so it's a growth opportunity, or they're under monetized because they can't monetize their users effectively, and they haven't figured out a way to do it. And Reddit was in a similar position. It looked like a bargain for users compared to something like a Pinterest here in terms of just roughly market cap over users or enterprise value over users. Neither of them has much debt, so it doesn't really matter. But I thought I heard something that you mentioned along the way that could really start to carry this away and really kind of get close to shutting the door on some of these AI competitors. And that was where you mentioned standardized English language approved test, because I heard in my head here thing that can't easily just be copied by your AI thing, because it's a form of regulation defense, basically, of, yeah, if you want a legitimate English language or whatever it might be, in this case, certificate that you can take to your employer and say, there you go, I've done it through Duolingo. I think there's an element of that everywhere else of my students kind of ripped me a bit, because apparently my LinkedIn only has 2 qualifications on it, and both of them are like Duolingo level something. There's a reason for this, and it's I didn't know I had a LinkedIn until this point. It's not because they're the only 2. They did this thing at a dinner where they kind of scraped our social medias, or tried to as best they could, and they had a question for us, which is, what are the 2 things on Dr. Wright's LinkedIn? I was like, I haven't got a LinkedIn. And it turns out I have. I've got Duolingo level something or other in French and Duolingo level something else in French. They have a big advantage there in terms of recognizability. You cannot as easily and portably, I think, say, I've done a ChatGPT course that I designed myself in German, so I can speak German. That ain't going to cut it. I've done a Duolingo something or other in German. That might. I've done an external body verified thing in English that is signed off via Duolingo. That will. That'll definitely do it. So that's where I'm looking for signs of a potential moat emerging. If they can find ways to get their courses kind of externally validated or something like that. I think they get a bit of it by themselves because people know them in the way that they don't know your random GPT led app. But I think that depends on that might be a question for how much it depends on what people are learning languages for. If they're learning it for professional purposes, and I actually think quite a lot of Duolingo's people are, rather than interest or general interest in wanting to learn a language, because I think there's quite a lot going on there. Is people in China learning English via this app was something I read along the way. They're not learning it for funds. They're learning it for getting on with professional qualification stuff because they want to study in some English speaking part of the world and they need a language certificate to do that. That's where I think the real interesting thing here is for Duolingo in terms of moat and AI disruption resistance. Absent that, and I saw someone on Twitter or X trying to argue, by the way, that no, Duolingo is way better because you can't get these things through. You can't get the same experience or whatever through AI. Duolingo is building AI courses. That's not going to be a kind of defense point here of saying there's things AI can't do because Duolingo's big ramp is currently AI. So you need to find a way around that thought. I think the regulation angle might be the answer here, Steve. So keep an eye on how that develops is my thought on it for the moment. Early days so far, but that's where I see the kind of bull case.
Yeah, and just to build on that point then, Steve, one of the things Duolingo is doing is building out a for schools platform. So it's a way for people to be able to teach foreign language, not just foreign languages, because there's going to be things like learning to read and write for kids aged sort of 3+. There's going to be a Duolingo app that they'll be able to use in nurseries and primary schools. But the Duolingo for Schools, Steve, is standards aligned with the curriculum, with the ACTFL and CEFR learning standards. Duolingo is basically linked in with and mirrored the curriculum and allows people to set homework and things like that within the lessons, and also refreshers about what was learned, in French period 4. And people will be able to go and redo the course again redo the lesson again in Duolingo. And also, if you missed school because you were off ill, they can issue it through Duolingo as well. So they're really smart, Steve. They've tied down this part of the business really well. And I'm really interested in it here. I think this is. I've been looking for something to buy, and it's not going to be with all of the money, but I think this is going to be one of the things that I shuffle into the portfolio at some point, Steve.
Still currently sat on cash then for the moment in a reasonably significant way.
All of it. Yeah, almost all of it.
Wow, stuff has been falling like hailstones from what I can see of it this week, and I'm
literally for me.
I have. Oh wow, yeah. On that subject, McDonald's actually did pretty well in their report, I think, this week. But maybe expect some higher costs on their next Q4 update around the holiday season, where they report higher operational expenses in service stations around the Hull area. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.